Several forex traders out there understand the concept of forex trading, but there's something they're still missing up, and that's the concept of the ICT Trend Continuation Trading Strategy. Now, if you've been working with the ICT trading strategy and you've been having issues one way or the other, this video is actually meant for you. Because in this video, I'll be breaking down how to work with the trade continuation strategy to make sure that you're going to maximize gains. We're going to be talking about your risk reward ratio. We're going to be talking about how the strategy works. We're talking about how you can implement it in your everyday chat. I've given you stepwise process and real-time example as you're seeing on this moving chart. So let's dive right into the market and see how the market plays out. All right. So basically, I'm working with the SAU USD charts to show you a buy example and a sell example. Before I proceed, yes, this is forex trading, and I make sure that I guide a lot of people when it comes to this feed. So basically, if you are in to learn forex trading, you can always hit me up by using the links in the description to chat me up. And if you are in to get free signals, free signals, and are committing from now till when we stop giving the free signals, work with the link in the description and get access to the free signals. We're doing this to actually help you out, okay? WhatsApp and Telegram. So back to the ICT trading strategy, and let's see how this plays out for all my subscribers. So definitely subscribe. Now, this is a buy example here, and this is a sell example here. For a buy example in chart, remember the name of what you're dealing with is trade continuation strategy. So definitely the market must be trending. And since a buy example is definitely trending upward. All right, so let's do this. So this is market trending upward and it's just trending upward. So looking at our buy example properly, we can clearly see there's a break of structure always to the upside. Now remember, a trend actually is either going up or coming down. That's when you see a trend is taking place. So basically, this is an uptrend, and that's why it's called a buy example. And so that this was the highest high in the market at some points. It retraced down and the market broke the highest high, hence the break of structure. Same thing on called here, broke it again, and here we are in the market again. So how do you enter a buy position, okay, when dealing with the trend continuation strategy for the ICT? Now, before you enter a buy position, the first thing you observe is a break of structure. After observing this break of structure, you look for a fair value gap the market hasn't filled in the market in the past. I'm going to be marking up the chart and seeing how we can look for the fair value gap before going into the real chart example. Let's do this. Now we've established that there's a break of structure and there's a fair value gap. What we're waiting for is for the market to come back to this fair value gap level, and at the 50% retracement zone of this fair value gap, we'll be expecting it to take a rejection and take the market back all the way up. Okay, so that's where you can ride the trend profitably. You don't just jump in and enter a buy or drop in and enter a sell when you're just creating nowadays, because if you do that, the market will take you and all those sellers out based on the liquidity that is already around these regions. Okay, so basically, since we're going to be entering the same way the bank enters and the market makers enter, we're going to be using that with the breakout structure and the fair value gap. Since the market will continue working from here, let me get my pattern, continue from where I stopped. So the market will come all the way down to this fair value gap region. And once the market gets into the fair value gap, it's going to pump all the way up, right, giving you a good risk to reward ratio. So now you can usually use the risk to reward ratio of 1 ratio. Okay, some of us work with the risk to reward ratio of 1 ratio 2, some of us work with the risk to reward ratio of 1 ratio 3, depending on how you want your risk to reward ratio to be. So you just need to be certain of what you want to do when dealing with this. So I'm going to draw out the risk to reward ratio and show you how you can actually check it out. So this is where you can click. So if you're going in a long position, you're entering from here. Your stop loss is beneath this last structure here. Okay, so your stop loss is beneath here, and take profit is all the way up. Remember 1 ratio 2 to 1 ratio 3. So if you are going 1 ratio 3, you make the market all the way to 1 ratio 3 and you can work with that constantly. If you're going 1 ratio 2, you take it all the way to 1 ratio 2. You can work with that consistently. Now, working with this strategy, I can tell you fully well that it's over 80% accurate. You must have seen a lot of your mentors talking about it. You must see a lot of people entering the strategy. But if you don't know how to work with it properly, it will still not be profitable. So remember, you're entering from 50% retracement zone. So this is a bad example. Let's go to the chart. Let's deal with a real-time buy example. Now, this is the chart successfully. So what are we going to observe from this chart? We're going to observe that there's the break of structure that we're going on here, which I'm going to show you shortly. Okay, so this is the GBP USD chart and we're on 30 minutes time frame. So this is the real-time example we're going to be working with over here. Now, focusing on this chart successfully, you can see that the market is in an uptrend here because you can see a break of structure to the upside. This was the former high. It broke it, went it up. This new high broke it, and we're currently here. So based on the example that we have over here already, so we're expecting the markets to come down to a fair value gap position that we're going to observe and then go all the way up. So let's come back to this chart. Let's look for a fair value gap position that we're going to observe in the market and the market is going to work with. So let's do this. Now this is a written example. So what we're waiting for right now is for the market to break structure to upside, come back to a fair value gap position, retest it, and then continue to run up again. So basically, let's play this and see. The market actually gave us a break and it's going to come back to a fair value gap position for us to work with. So we're going to be looking for a fair value gap position in the markets. So yeah, we waited for the market to get to this fair value gap position. And now we are sure the fact that the market have got to fair value gap position. We'll be expecting our trade to go long. Alright, so our long position, we'll be getting in our long position right about now. From this region, we'll be entering for a long position. Our stop loss is going to be directly beneath this previous low over here. So this low is going to be having a stop loss. If you want to say far, you can take a stop loss over here. But yeah, why are we working on this low? Because you know there's a break of structure already going on. And the market can still break this low, it means it's not valid. So if you're a swing trader, you know yours will having a huge stop loss, which means you're having a very, very huge TP. If you're a day trader, you can actually work with the risk reward here. So this is not really much of a pip for a day trader. This is roughly about 30 pips here, 30 pips for a day trader. And you're going to be targeting, which means 1 means you're targeting 90 pips take profit. So with a 1 risk reward ratio, next take profit is going to be taking all the way up. So let me adjust the market so I can take this all the way up. So 1:3, and this is roughly 1:3 here. So yeah, so with a 1:2 risk reward ratio, watching the market play out over here. So let's play this and see what happens. So the market rejected, started coming down and moving up, moving up, moving up. The markets smashed that take profits. So basically, you can clearly see that this strategy is actually a very great one because you can see how we made a profit of 1:2 weeks to reward ratio. Yeah, so this is a bad example explaining this strategy. So let us work with the sell chart and understand how this ICT trade continuation works for a sell situation. Let's do this. Yeah, so we observe that there's going to be break of structure to the downside, break of structure to the downside. So this is where break of structures will be in. So let's do this. This break of structure appearance, what I'm going to be waiting for is the market to retrace up and then come back down. So let's say the fair value gap position that we observed is somewhere around here in the markets. Okay, so we're going to wait for the markets to come back to this position. All right, and once the market come back to this position, it makes rejections and then take the market all the way down for a 1:3 risk reward ratio profit. So you are constantly using 1:3, constantly use it. If you are using 1:2, constantly use it. All right, remember we created a short video on TikTok. I believe I still posted it here on YouTube. We talked about the market, your risk reward ratio. The longer it is, right, the less your win rates, because definitely you're aiming for something higher. If you're aiming for a 1:4 to complete, it means your win rate will reduce because not every time market gives you a 1:4. If you're aiming for 1:3, it will be better than 1:4, but it also reduces. 1:2 is easiest to hit your take profit with, like 15 pips stop loss for a 30 pips take profit. Understand? Or 15 pips stop loss for 45 pips take profits. That is a 1:3, 1:2 situation. 1:3 is the last one, 1:2 there. Right? So yeah, this is what fair value gap position is. Let me just put the fair value gap so I can understand it. I'm making this video as comprehensive as possible. This strategy is what you're learning for free here. And I want to make sure that you totally understand how it all plays out. If you haven't subscribed, I'm giving a lot of value here. Do subscribe, and you can join our Telegram and WhatsApp communities for free trading signals, analysis, trading ebooks, guides. Let me help you. All right? Join us. So yeah, so this is how the fair value gap will be, and then you'll move the market all the way down. Now, what I'm going to do right now, we're going to be entering the market for a sub position at 50% rejection zone here for the stop fair value gap, and our stop loss is going to be above this previous high, and targeting a 1:2 to 1:3 risk reward ratio, depending on what you're looking for. Remember, the higher your risk reward ratio, the lower your accuracy, and you can work with that. So sometimes you can work with the 1:2 risk reward ratio. You want to work in that, and then just trade. You want to trade. If you want to be street as is 1:2. I risk $5 to $20. My $5 go, no problem. My $30 come, no problem. You can do that. Okay, it's just to walk over psychology and you know how it all plays out. Okay, so this was sell example. Let's go to chart and see a real life example for a sell trade. This XUD chart, and both of us we're going to work on this together to explain how the cell setup works. So basically, I'm going to get to my part two, and we need to identify first and foremost that this is a downtrend. So you can see because structure to the downside. So those of us that don't understand because structure, let me show you. So starting from all the way up, market came down and went up back. So basically, you can see there's also already going up there, which is the retracement. No, it don't just stop there. It broke this current level of support and formed a new one at bottom. It went up back, broke it, formed a new one, went up back, and just like that, we're currently here in the market. So I hope you understand what this signifies in the market right now. So now what we're looking for is for the market to actually break the structure up again, go up and come down to break this particular structure. So let me show what you're talking about here properly. So this is going to be, I'm going to get my trend line too, and I'm showing you shortly from here. So yeah, so this is where we're currently at in the market. So what we expect the market to do is to come all the way here and break structure. Okay, expect the market to come all the way here to break this structure. So if market can break this place, we'll be looking for fair value gap positions and following it up. So let's see what happened to the market. The market has broken our structure, and for the market retrace back, what are we going to be looking for? Fair value gap positions to enter our trade. So let's see. Can currently spot one over here. Okay, let me get my rectangle too and I'll show you. Currently spot one fair value gap position over here. One here. And I'll keep on observing. Let's see what the market is going to show us. Yeah, so the market actually rejected into this fair value gap position. Okay, let's see it's already here. So from here, we must have already entered our sell position when we're already here. So let's go back to this short position. So around here, we enter our sell, stop loss above the previous, and then take profit of 1:2 weeks to reward. So let's do this together. 1:2 weeks reward or 1:3. We're looking for 1:3. Remember, 1:3. The more you take 1:3, the more risky it becomes. So let's seek a 1:3 weeks reward ratio. Okay, so this is a 1:3 weeks reward ratio. Now you can clearly see how this plays out. So yeah, remember there's something called premium zone and discount zone. For a sell position, you're always supposed to be selling from premium zone. So you have two fair value gap positions. You're supposed to be selling from a premium zone. But from here, we observe this position over here. Alright, and if you are selling from here, it means you are selling from a discount zone. So you're going to be selling from a premium zone. You would have checked out if the market formed another fair value gap. So you can see from here, these rejections occurred here, which is under fair value gap position. So people that entered from here would have gotten a pretty okay risk reward ratio than this. You know why I said pretty okay one? Because they would have had their trade over here, their stop loss over here, and then their risk reward would be 1:5 in this position. But remember, we're working with 1:3 risk reward ratio. So let me show you the two examples playing out and how it will affect the trade just by following the discounts, the premium, and the discount zone. Premium on top, discounts at the bottom. So this we entered from a discount zone initially. Let's say you're entering from discounts. You didn't see your premium. You don't bite yourself up. Let me show you what will happen to you in the markets. Okay, you're still going to work with your 1:3 risk reward ratio and play. So the market is still working your favor. It's working your favor, and then it's moving, and market has gone to hit your stop loss. Now, why this happen? If you check out from what happened in the market here, let's take the stop loss all the way up. Let's see how much profit you made initially before the market moved up against you. So checking this properly, you see that you were actually roughly 1:0.89, which is not even up to 1:1 risk reward ratio. Okay, depending on how you see, let's say 1:1 though, depending on how your stop loss is, because it's directly above here, 1:1 risk reward ratio. All right, so which means you just break even, but you won't not be breaking even now. You are waiting for a 1:2 or 1:3, and the market came to stop you out. But if you had opened your position at this premium zone, okay, at this premium zone profitably, your stop loss directly above this current low, yeah, current high there. That is where your stop loss will be because you're actually from your stop loss will be above this, and your 1:3 weeks reward ratio coming down. Let me show you how this should have played out for you. Good. Now, 1:3 coming down. What would have happened here? You'd have also been in a losing position here. Why? Because you are using 1:3 weeks reward ratio. I'm giving this example to show you that it's not every time you have profits. So you don't just go and blow up your account trying to put everything in it. It's called 80% plus approved. Cool. Some people will have it depending on their strategy and direct reward ratio. It can be 70%. Cool. Even if you're using 55% and with a good risk reward ratio, cool. You understand? We did an example. I believe you must have followed the example where we calculated you even making profits with a strategy that gives you just profit three good times on the one to two risk reward ratio. You have a 30% profit strategy, profitable strategy with a one ratio, two risk reward ratio. In the long run, you're still profitable in the markets. But this is giving you over 30%, over 50%, over 70%, over 80%. I can manage it. So I'm just giving the example to show that it's not every time that you having Christmas. Yeah, there are times you take losing trades like this. Right? So if you're having losing trades like this is what you're going to see. If you had actually, if you are taking a stop loss here to be a one shoot two position, you'd have actually been in profit. So you can see one shoot two trader would have just taken his one shoot two profit and gone. Yeah, but one shoot three trader would have hit stop loss pretty much. Or if you are a good forex trader, you observe fully well that the market at this region was already creating lows. Now look at this bottom. You can see a triple bottom pattern. So the market came down. Let me use the pattern show you. Came down, did this, did this before moving up, coming back for this and going up again. You should understand that okay, this market has started changing character and then everything is not going in favor for me again. So upon seeing this, you should know that yeah, the market has changed position and is already ranging, and this is another opportunity for you to even seek another position because you must have taken a profit from here and you have seeking the markets here. So this is not trade continuation. So I'm going to explain it in this video. It's another concept you can use, but not a trade continuation strategy. This video is concentrating on trade continuation, which I've shown you over here. I believe I'll be able to explain this with these concepts. Alright, so there you have it. We've explained the ICT trade continuation strategy from the buy example even down to the sell example. I believe you now understand how the strategy works and how you can make profits with it. If you actually enjoyed this video and you actually got imparted with so much value, do want to leave a like on this video and then subscribe to this community because I have more strategies that we're uploading here. We have the ICT reversal. We have other backtesting strategies I'm also posting here for you. So do want to stay subscribed. And yeah, if you have questions, do want to drop your questions in the comment section. And by God's grace, I will do my best to actually respond to all the comments I see in the comment section. Okay. Yeah, so I believe this is this for this video, and I'll see you in the next. Sign out now, champs. Peace.